So you think you know a thing or two about trend lines because you can draw them on a chart and wave your arms around them? In this video, we'll be learning about how to spot them and the criteria for whether they are valid. Hi everyone, and welcome to the Beginner Trader series. Today's topic is trend lines. We're learning about trend lines because trend lines help determine some simple price action, as trading should always have some price action attached to it. So here we have the 30-minute chart of the E-mini S&P 500 on September 28th to 30th, 2022. For this video, we will be using the 30-minute, 5-minute, and 1-minute together, but this concept can be used for all time frames and any combination of them together. For trend lines, we always want to start with at least 2 points of contact. These lines could be horizontal or slanted. It's just more important whether or not they're useful. Here we can easily see the market came down to bounce off this price level twice, so we can draw a horizontal line through them to indicate a support level. Next, we can also see there are 2 points where the market reacted and bounced off of the top side, so we'll draw a slanted line connecting the two to indicate a resistance level. Then, after we draw our lines, we'll need a rule for ourselves to determine whether or not the line is broken or still valid. I personally use 2 or more closing candles after the break of the line for time frames higher than 5-minute candles, and 3 or more if using 5-minute candles and less. The second is, if it is a horizontal line, if it breaks the lowest low or the highest high of the other touch points, then we will also consider it broken. An example of this break can be seen on the right-hand side of the chart. Most of the time, but not always, it will come back to retest the line it just broke, so careful about entries and stops. Note that 1 or 2 could come first, but any one of them happening is good enough. Next, if it is a slanted line, if it breaks the lowest low or previous highest high of the last touch point, then we will also consider it broken, which did not happen in this chart, but we will see an example later in the video. The main reason we want to draw these lines is to see how the market reacts when it touches our lines for the third time. Since these are 30-minute candles, we'll have to go into a smaller time frame, namely the 1 minute, to see the market reaction more closely. So now we will zoom into this section to see how we could find opportunity using our trendline criteria. So here we can see that the market had a bullish response to the third touch. We can have an entry on the line when it comes back into the range, or when it retests the line again. We can have a stop just below the recent low. Alternatively, we can use the lowest low of the previous touch points, which was 3,615. Using again our trendline criteria, we can note again the 1-2 touch points and draw a line through them to indicate the support level. We can use our criteria for stop loss. If it breaks the trend line, we will sell out of our positions. Note that the third touch point of our yellow trend line is a valid entry as it did not break, so we can add to our already existing position. Then as the price reaches the top of our 30-minute resistance line, we should consider selling out partially or fully, as the direction could change since that is the third touch of the top trend line. Since our top blue trend line is drawn on a higher time frame, namely the 30-minute, it should have more weight to it in general than our yellow trend line drawn on the 1-minute time frame. We can use the same broken line criteria for the top side if we were to enter a trade. 3,695 would be the stop, as that is the previous highest high of the last touch point on the slanted trend line. Alternatively, once it breaks our yellow trend line, we can also wait to enter when the invalid line criteria is fulfilled, where the stop would be 3,685, the previous local high. As promised, we can see an example of 2B, where the price breaks below the previous lowest low of our yellow trend line, further validating that the trend line is broken. Next, we will zoom out to the 5-minute time frame to see how we can play the break of the bottom 30-minute trend line. Those with a keen eye will already notice a trend line can be formed, and so we'll draw it here. After the break of our 30-minute blue trend line, we notice there are more than 3 candles that have closed below. Therefore, when it comes back to retest our blue trend line and yellow trend line, it is a valid entry for a short position to the downside. There would be 2 stops for this position. Using the 5-minute yellow trend line, we would use the previous highest high. For the 30-minute blue trend line, we would use the previous local high before the break. In this case, the price level is the same in both instances. Now we'll look at a live trade from this past Thursday. Here we could see that the price is coming back to retest a broken support line. Before I even enter a trade, I have a stop loss calculated, the previous local high. Now we'll enter a trade and zoom in here to this section of the chart. Most traders will be biased and think the price will continue to go up because of this broken triangle. Here, they will see a retest of the broken line, and that's okay. The price could go up from this point, and that's just a decision every trader has to make. But as a trader, you'll have to be aware of both lines, so you know both directions are possible at this point. So the price continues to be supported on top of the triangle until it breaks below. Here I take profit at the bottom slanted trend line, since price could go up from here as well, for a 1-to-1 risk to reward. I'm holding on to the other contract to see how the trade will play out, with a potential hope for a 2-to-1 risk to reward ratio. Here I use TradingView's short position tool to figure out where the 2-to-1 risk to reward ratio is, since that would be my exit. It continually jumps up and down, and here you could see we can create a trend line. I exit the position expecting a flush down to my target, but it stopped here. You see eventually it does hit our target, but at that time we're already out of the position. So now you think you know everything about trend lines? Well, you'll notice sometimes it does break and the line is invalidated, only to go back in the opposite direction like this chart here. One reason is due to something you will learn about in a later video, the concept of corrective waves. They usually come in an ABC zigzag pattern. The nuance I wanted to point out is normally C will touch your trend line and sometimes even break them. Just one of the many nuances of trend lines. Guess you don't know everything yet. If you found this video interesting or useful, please give this video a like to support the channel and future videos. Subscribe to the channel to keep up to date on the newest videos and analysis I will upload. See you in the next one.